Hello everybody and welcome. Delighted to have you join us to kick off the next season of Outlier Ventures Demo Week. Over the course of the next couple of days, we'll be highlighting the remarkable teams, startups, founders that participated in the first three programs of 2024. First, we'd like to thank all of those in attendance for continuing to support us, the founders, and the ecosystem made up of investors and partners. Your presence really highlights the vibrant ecosystem that we've managed to cultivate over the last decade, and it's a great pleasure to introduce to you some of the most exciting early stage startups in Web3 from all around the world that have graduated our world-leading Basecamp Accelerator. So over the next couple of days, we'll be learning more about the 21 exceptional teams from across those three programs. On day one, we'll be diving into the world of DeFi and interoperability. Day two, we're going to touch upon infrastructure and our continued commitment to an open metaverse. The focus of today really centered around DeFi and really looking at interoperability and innovations from participants emerging from both a combination of our Bitcoin dedicated program and Wormhole Basecamp. The Bitcoin ecosystem continues to push boundaries, driving composability and scalability to new heights, with LATAM actually being a very large focus for both applicants and teams that successfully made it into the program this year, representing about 40% of the cohort. With the resurgence of Bitcoin, we're really witnessing the birth of new verticals of what you can do with Bitcoin, both in terms of DeFi, asset issuance and infrastructure, and of course, a big focus on mainstream adoption. Simultaneously, our Wormhole Basecamp cohort has been incredibly successful, charting a course towards a modular and multi-chain architectures. Their efforts are really highlighting a crucial trend, a future where DeFi benefits from unprecedented liquidity and interoperability, and really kind of breaking down barriers and silos between and across ecosystems and paving the way for a more integrated Web3 financial landscape. Today, you're really in for a treat as 11 exceptional teams take the stage to unveil their groundbreaking projects. But before we delve into their presentations and introduce the founders, I encourage you to explore the softer webpage where you're going to find detailed insights into each team's journey and can directly request introductions effortlessly. Without further ado, I'm going to pass the mic to our esteemed partners, Rootstock Labs and Plassa Capital, who will share their perspectives on Bitcoin and DeFi. Later, of course, Wormhole and Borderless Capital will illuminate the path towards the promise of Web3 interoperability. Enjoy the day. The focus of today is centered around DeFi and looking at interoperability and innovations coming from a combination of our Bitcoin Basecamp, Wormhole Basecamp, and Futureverse Basecamp. Meet the best teams building in the DeFi and interoperability spaces this quarter. Introducing Ongun Ozdemir of Rootstock Labs, the ecosystem partner for our Bitcoin Basecamp.
Hi everyone, my name is Ongun. I'm the Senior Venture Associate at Rootstock Labs. We're a company of around 150 people spread across 40 different countries from around the world. We are contributors to Rootstock, the first and leading Bitcoin Layer 2 blockchain. Since its launch in 2017, the chain boasts 100% network uptime, over $300 million in market cap, and over 50% of Bitcoin's hash rate securing the network. This makes Rootstock the most secure blockchain after Bitcoin. At Rootstock Labs, our mission is to make Bitcoin work for everyone. We're starting with the 1.8 billion underbanked individuals from across the world. Through our everyday DeFi thesis, we help the next generation of builders and operators create the tools, dApps, and infrastructure to address this need. As outlined in the Basecamp's thesis, Bitcoin is the leading digital asset by far, making up over 50% of the market. However, 90% of that Bitcoin is currently underutilized and locked up. So just over the last 9 months alone, through many different initiatives such as partnerships and our newly found grant program, we've attracted over 50 top entrepreneurs, founders, and operators to tackle this huge opportunity and build alongside us. Our partnership with Outlier Ventures and the Bitcoin Basecamp program is the next step in our commitment to accelerate exceptional founders building right by our side.
Thanks for that, Ongun. Now meet Yash Chopra of Plassa Capital, the venture partner for our Bitcoin Basecamp program.
Hey everyone, this is Yash at Plassa Capital. We're an early stage venture firm focused on crypto and big believers in the Bitcoin ecosystem. We're excited to share the latest with you for our Bitcoin Basecamp cohort and glad you could join us. It's hard to ignore all the headlines with the halving and mentions of Bitcoin adoption from individuals, retail merchants, institutions, and countries. But what gets us excited at Plassa is all the people behind the innovation that has gotten us to this point. The sheer amount of talent pouring into the most decentralized, secure, and resilient public blockchain will only continue Bitcoin's advancement over the next 3 to 5 years. We see new developers coming in with a fresh perspective, as well as experienced Bitcoin builders coming back and leveraging their learnings from other ecosystems. A question that we think about a lot at Plassa is how do we help drive ecosystem development? You have to give developers the tools to build highly expressive projects and to go to market quickly. You'll hear from DeepLake, which offers an API for developers to build native Bitcoin DeFi apps easily, as well as an attestation layer and decentralized Oracle solution for L2s and dApps. You also need a secure and seamless user experience to easily onboard users. Bloom is completely reimagining the wallet experience for new and advanced crypto users to trade tokens and NFTs, explore new dApps, and implement DeFi strategies directly from within its secure cross-chain wallet. Bitcoin's simplicity is key to its open and permissionless and censorship-resistant settlement network, and its dominance as a store of value has far-reaching real-world use cases, including access to financial services. We've selected teams from all over the world who are committed to this mission. You'll hear from Sati that is tackling a huge use case in payments and cross-border remittances in LATAM and other regions in need. But new asset issuance standards and demand for scalability are catalyzing a nascent ecosystem of new L2s. Ultimately, the goal is to enable holders to use Bitcoin more productively and interactively. You'll hear from cohort companies who are helping to make this happen. Jolts, a B2B rewards platform supporting not only Bitcoin, but also Taproot assets and Lightning Network with a whole suite of products, including an e-commerce plugin, API, and a non-custodial wallet. You'll also hear from Ordinox, a cross-chain liquidity protocol, enabling users to easily swap between Ethereum and Bitcoin without using wrapped or pegged assets. Testnet is out, and I encourage everyone to check it out. We hope you're just as excited as we are about these teams. The feedback from the cohort on the program has been overwhelmingly positive. The breadth and depth of the sessions has been phenomenal. I want to thank everyone at OV and the mentors for being such incredible partners to us and our portfolio companies.
Introducing our teams building in the DeFi space this quarter: Ordinox, DeepLake, Bloom, Sati, SimpleFi, and Spark. Introducing Ordinox with Ashwin Prasad from Bitcoin Basecamp.
Hi everyone, I'm Ashwin. I'm the co-founder of Ordinox. Ordinox is a Bitcoin native cross-chain swap, which lets users swap between assets on Ethereum and assets on Bitcoin. Currently, if you hold some USDT or ETH on your Ethereum mainnet and you want to buy some tokens on Bitcoin, your experience is very convoluted. You have to first get some Bitcoin on a centralized exchange, put them on a compatible wallet like Xverse, and then go to a marketplace like Unisat Marketplace where you can buy fixed quantities of the tokens you want to buy for fixed prices. Once you hold these tokens, if you want to sell them, you have to list them again for fixed price and fixed quantities and hope that someone buys them off of you. This experience is very similar to how you trade NFTs, but you're doing them for fungible assets. This experience, again, is gatekeeping a lot of the liquidity, retail liquidity and retail interest from entering the Bitcoin space seamlessly. And Ordinox solves this by being a cross-chain swap, which lets users swap in and out of the Bitcoin ecosystem seamlessly. This is our application. We are live right now. And as you can see, you can just connect your Ethereum wallet and your Bitcoin wallet, and you can trade tokens on both Ethereum as well as Bitcoin like you would on Uniswap or any other DEX which you're already familiar with. To enable this, we are built on top of the Cosmos SDK, which means that we have our own app chain and we have native liquidity pools on both Ethereum as well as Bitcoin, which helps enable these swaps. The market opportunity we are looking at is obviously very massive because Bitcoin currently has a fraction of what Ethereum has in terms of DeFi TVL. And we believe we are opening up a highway of liquidity to kind of enter the Bitcoin space and enable a lot of these retail investors and traders to participate in the Bitcoin ecosystem. How we differ from others is that we don't focus on BRC20 or Rune swaps inside the Bitcoin ecosystem. We are in fact focused on getting external liquidity from outside of Bitcoin into the Bitcoin's token ecosystem. So we don't focus on swapping inside Bitcoin. Second is we're not a bridge. We don't wrap your assets, or we don't use any messaging protocol to kind of signal anything. All the swaps which happen on our platform are indeed native, which means that you get mainnet Ethereum for runes on Bitcoin mainnet, and there's no wrapping which happens in between. And finally, we're not a Bitcoin L2, which means to say that we're not solving for the smart contract problem on Bitcoin, but indeed we are actually partnering up with a lot of the L2s to help bring a lot of liquidity into their token ecosystem going forward. Our revenue model is very straightforward. We charge a fee for every swap which happens on the platform, and the fee is a function of both pool depth as well as swap size. And this has been modeled after ThorChain's liquidity fee model, which has been working very well for the last 4 odd years now. The roadmap, coming to the roadmap, we started Ordinox in late December last year, and we launched our testnet early April this year. And going forward in a month and a half, we plan to go on our mainnet and launch our token as well along with it. Currently, as it stands on our testnet, we already support Bitcoin mainnet as well as base mainnet, which means that we let users swap mainnet assets already. It's just that we are in the testnet phase ourselves, and we are partnering up with a lot of meta protocols as well as other EVM and non-EVM chains to help expand the scope of our product. But moving forward, we plan to offer a lot more DeFi products, which will help users utilize the runes and BRC20s which they have on Bitcoin and make as much upside, get as much upside as they can get. The founding team is myself, Ashwin, Ankit, and Prithvi. Ankit and I are the co-founders of Ordinox. We have been working together for the last 6-7 years now. And previously, we have built various ventures which have been backed by Filecoin, Solana, Crypto.com, etc. And I've been a dev myself for the last my entire career, 6-7 years, and then I've been in crypto focused for the last 4. And I'm an open source contributor for multiple projects, most notably to OPI, which is the indexer used by all exchanges and all of the wallets which use Bitcoin. Ankit has been a CMO with me for all my previous ventures, and he has a lot of connections with KOLs and a lot of marketing experience which he brings to the table. And finally, Prithvi has a whole slew of experience working with various giants like AWS, Twitch, etc. And he most recently has been working with, he used to work with Helios as well as QuickNode as a principal software engineer there. And he gets a lot of the connections which he has in the industry into Ordinox as well. So that has been our deck. Thank you so much for your time. I would love to connect with you guys and discuss more about Ordinox and what this can mean for the future. And I'm happy to kind of take things forward either by connecting with us on Telegram or through our website. Yeah. Thank you so much.
Introducing Deep Lake with Abdul Haraz from Bitcoin Basecamp.
Hello, my name is Abdel and I'm the co-founder and CEO of Deep Lake Finance. Deep Lake is driving innovation at the forefront of what is possible with Bitcoin to bring limitless possibilities through one financial data layer to the Bitcoin ecosystem. As you might know, DeFi is going into a bull market. Bitcoin is shattering its all-time highs, and 2024 is going to be a monumental year for BTC with the ETF and the Bitcoin halving events. Developers are pouring in to build on Ordinals and L2s, discovering underutilized tools of the Bitcoin ecosystem and unlocking a staggering once illiquid $1.4 trillion market to build next-generation DeFi solutions. Now, all of these are super good news, but will the ecosystem hold without a strong infrastructure and data layer? How can it hold? We are certainly going to hit a need to augment Bitcoin L1 and L2s with the proper Oracle infrastructure to operate rich and smart Bitcoin DeFi apps. DeepLake addresses this problem with its novel state-of-the-art Oracle standard communication protocol that lives on top of the Ordinox indexer network to referee outcomes, participate in multi-sigs, monitor on-chain activity, and inject off-chain data for a rich set of DeFi Bitcoin apps. All of this through an extremely simple and comprehensive API interface that allows developers, which by the way do not need to be a Bitcoin developer, nor learn a new smart contract language to go to market with their apps in a couple of weeks instead of months. Using DeepLake, the first ever Ordinals lending borrowing native Bitcoin marketplace in the ecosystem was born. And currently we are servicing protocols for the securitization of ZK rollups L2s, cross-chain loans, stablecoins, and so many other use cases. And this is our biggest differentiator. Where others are building use cases using Bitcoin, we are first mover with a simple developer infrastructure that is agnostic to which business case our customers would like to build using the raw power of Bitcoin primitives. Building on our current go-to-market strategy that revolves around a strong and trustworthy developer tooling brand, and that we are looking to scale, we want to onboard 3 new partnerships with incubators and accelerators, 3 new partnerships with launchpads, and 5 new scale-ups companies onboarded in the next 6 months to continue to grow our acquisition pipeline. Our prod started in March 2023, and we have been seeing meaningful traction since then on different types of use cases with our customers. These guys are onboarded on a freemium model that starts generating fees between 3 and 10% once they hit a certain transaction volume. They also pay for integration if they need specific software built for them. This allowed us to move more than $40 million in value and generate around $180K in revenue. The seemingly small amount adds up super quickly as we have already shown the huge market size. Using Ethereum as a proxy, DeFi on Bitcoin is at least $140 billion in the next 12 months. Building the product and onboarding customers was only possible because we are the best team positioned to solve this challenge. Thanks to our track record of success building fintech and related products, we demonstrated our ability to tackle complex technical challenges related to Bitcoin and simplify them. For instance, in the last decade, I bootstrapped 2 companies to profitability and exited a third. And Amin, our COO, headed finance operations for the North and West Africa and the MENA region of Nestlé for over 6 years. We are shipping value and on track to disrupt Bitcoin financial infrastructure in 2024, by which we expect to have the public launch of our Bitcoin Oracle and our managed deep liquidity pools. Thank you.
Introducing Bloom with Charlie Varley from Bitcoin Basecamp.
Hi everyone, I'm Charlie Varley. I'm the founder and CEO of Bloom. We have created the hub for everyone's Web3 journey from start to finish. Web3 is complicated, esoteric, and overwhelming. The current tooling is inadequate, and one of the main reasons why the fabled 1 billion users are yet to start their Web3 adventure. Currently, if you want to discover the endless possibilities within Web3, you need a bundle of different tools, the learning curve is steep, you're going to have to invest a lot of time and energy. The wallet previously was just a place to trade tokens. What we have created is a hub for your entire Web3 journey. So, what do people from start to finish in Web3 need to do? They need to learn about crypto, they need to discover what opportunities exist within Web3, and the more advanced people, they need to manage their own portfolios, their own DeFi strategies, NFTs, and beyond. When the next 1 billion users are onboarded to Web3, we are going to be the wallet that onboards them with the most beautiful UX UI that they're gonna fall in love with. When you want to discover new things in Web3, you use Bloom and we reward you with our native token just for coming on board and discovering Web3. Replacing Galaxy and Jump Task, and it's all within your wallet because it's your central hub. 2, people then go on Twitter. They follow all the influencers to get the latest alpha. Bloom is your #1 way to find out who to follow, who not to follow, and where the best alpha is. Replacing Tweet Scout and Alpha Scan, and it's all within your wallet. Why? Because it's your central hub. 3, You know who to follow, you've started investing. Now you're ready to mature from newbie to intermediate, where you're investing beyond Bitcoin and Ethereum and you're looking at altcoins. Now you're ready for DeFi strategies and copy trading. And again, it's all within your wallet because it's your central hub. We encompass the entire Web3 user journey from newcomer to intermediate to advanced, and it's all within your wallet. This is what the future of Web3 wallets looks like. Our token rewards users who positively contribute to Bloom's ecosystem. Users earn points for utilities like swapping and bridging, and for referring their friends to the app. They are also incentivized to generate on-chain peer-to-peer recommendations and contribute to the health of Bloom's social graph and network effects. So, our marketing takes care of itself. We onboard one user, they onboard their entire network. Points then translate into Bloom tokens, which can be staked to earn rewards from token buybacks. We take a small convenience fee on wallet utility functions: buy, swap, sell, and bridge. And we take a fee on all assets under management in DeFi strategies. For the more advanced users, by paying a monthly subscription, you remove all fee markups and you get access to a range of pro features like copy trading and advanced portfolio tracking. Our team has built and scaled successful wallets before, including a wallet with 160,000 users. Our CTO has delivered projects for the Ministry of Defense, and our UX director has shipped products for Disney. We know what we're doing. This is not our first rodeo. We will start by unlocking the largest opportunity in Web3 today, the Bitcoin ecosystem. This is a user group who is only now starting their Web3 journey, newly exposed to things like NFTs and DeFi, where 99% of assets and $1.4 trillion of value sits idle. Bloom will be the wallet to unlock DeFi on Bitcoin. Where our secret sauce lies is in our peer-to-peer social discovery engine, our one-click AI DeFi strategies, and our UI UX magic. No other wallet is suitable for guiding you through your Web3 journey from start to finish. We have just launched our 1.0 version, and we are officially revenue generating. We have tier 1 partnerships with layer 1s, media outlets, and wallet utility providers. We have 5,000 users, and we've seen a 96% retention rate. The opportunity speaks for itself. Thank you for listening. Please reach out to learn more.
Introducing Sati with Philippe Savin from Bitcoin Basecamp.
How the world can change if everyone can send and receive Bitcoin and stablecoins just sending a WhatsApp message. That is Sati. My name is Felipe Servin. I'm the founder of Sati and serial entrepreneur, and I want to show you how to send and receive Bitcoin and stablecoins using WhatsApp. The problem is really simple. Moving money in emerging markets is quite difficult. It takes a lot of time and also money. Transfers are inefficient, basically. Combining that with an unbanked population and most of the economy being cash-based. The really painful problem is currency instability. A lot of countries are losing value every day. Countries like Argentina, Lebanon, Nigeria, and a lot of them are pretty much desperate to access a currency that doesn't lose value that fast. Most of them are looking for stablecoins, but you know the solution. Bitcoin can solve this, but the current crypto apps are not for mass adoption. Explaining what is a mnemonic phrase, trying to get into why the fees change every second and install a crypto app is complicated. That's why we create Sati. Sati allows anyone, anywhere, to send Bitcoin in seconds. If you know how to use WhatsApp, you know how to use Sati. You can send Bitcoin as simple as sending a message. Instant, cheap, and secure. The most important thing is, in a lot of these countries, people don't have phones with enough storage. They do not install new apps, bank apps or crypto apps, but everyone has WhatsApp in their phones. Also, on top of that, The usage of WhatsApp is subsidized in a lot of countries, for example, in Latin America, allowing them to send and receive messages with no data plans. Sati is a composable social payment infrastructure divided in 3 levels. On the base level, we have a management wallet system that can allow the creation of non-custodial wallets in less than 3 seconds. We have a middleware coordinating all of these transactions. And finally, on top of that, we have the bots. These bots are the interface to be able to send and receive these stablecoins, but also allow us to plug and play another kind of bot, like a Telegram bot, Line, or an app. This one is the real power of messaging bots and payments. Now, I want to show you 10 seconds of magic. You open WhatsApp, say hello, the bot verifies your identity. You choose send, where to, the amount of sats, finish with the PIN number, and magic, right? As simple as sending a message. What makes Sati really special is these 3 things. In-house encryption. As I mentioned, to create these wallets in a couple seconds. We're using Bitcoin Lightning to reduce fees to almost 0 and have these instant transactions. Finally, we reduce the friction to send and receive Bitcoin to almost 0. Why now? We have increasing internet and smartphone penetration. The smartphone adoption in Latin America, for example, is on top of 80%. But in countries like Argentina and Brazil, WhatsApp precisely has 96% penetration. And on the other side, we have these cross-border transactions happening and growing double-digit year by year. The market is huge. This is a $145 billion market per year, having Mexico as a leader, moving $65 billion. And we have a lot of population in this situation, almost 500 million people with this situation. Our focus is pretty much staged in a regional go-to-market, having Argentina and Venezuela as the top 2 countries in necessity to access stablecoins and Bitcoin for a quick solution, and Mexico for a volume that is happening between these cross-border transactions. But the future of Sati doesn't stop there. Our global potential is to empower nations in need, countries like Nigeria, Lebanon, Egypt, Turkey, and a couple more in Southeast Asia. Our business model is quite simple. We take 1% of every transaction. And in the mid-future, we're building our on-ramp, off-ramp, and swap capabilities in which we can take bigger percentage. But also we see the future of Sati on a business-to-business solution, where we enable business to receive stablecoins and Bitcoin as easy as receiving a WhatsApp message. The team is just the new generation of DJs. Myself, I built the largest Facebook community for Spanish speakers using AI, reaching 50 million users in a couple years. My CTO have experience in Web3 development, launching a launchpad in a multi-channel solution. And Sofia is just a growth hacker with a lot of experience and top companies in their portfolio. We have early traction. We have really launched our MVP in the mainnet alpha version. Also, we have incorporated entity in the US as a Delaware Corp. And finally, we have a little more than 300 users testing every single feature that I'm just describing here on WhatsApp. If you are interested, please, let's take Bitcoin to mass adoption. Join us. Thank you.
Introducing SimpleFi with Alejandro Ramiro from Bitcoin Basecamp.
Hello, we're SimpleFi and we're making blockchain payments simple. Inflation is a top concern for 1 billion people living in countries with over 20% inflation. For workers in these economies, crypto is organically becoming the preferred way of receiving their monthly pay, but off-ramping to spend in the real world is a tedious and expensive process, and there is just no easy way for both merchants and users to transact in the real world with cryptocurrencies. Our solution enables merchants to get paid in strong currencies with no additional operational work, while giving consumers an easy way of spending their salaries. We do this by embedding our product in the local software solutions that merchants are already using in their markets, giving consumers a simple UI to pay with. Below the surface, our APIs connect with the blockchain, the merchant's point-of-sale system, and the consumer's wallet, providing a great user experience. We believe this is the right time to work on blockchain payments because it's very recent that we have low-fee, fast transaction blockchains. There's also no established leader in the category, and now in 2024, we have a minimum addressable user base. The payments opportunity in blockchain is forecasted to grow at a 40% rate, reaching 40 billion by 2026. But the current solutions are not good enough to support this growth. There's rigid one-size-fits-all solutions where merchants need to figure a way to integrate with their usual business flows. There's closed payment solutions where users are expected to use a specific wallet, which is very high friction. And then there's what we are building, which are localized payment experiences that are optimized for commerce niches and integrate with the software the merchant already uses. The team behind SimpleFi has been building successful payment products together for the past 5 years. But most importantly, we lived our whole professional careers under state-induced economic crisis and restrictions. And for us, cryptocurrency was the one tool that allowed us to build and operate an international business. As users were convinced that if Bitcoin is to reach over 1 billion users, it desperately needs to be easier to adopt for merchants, and that is exactly what we plan to do. We are backed by founders, accelerators, and one of LATAM's longest operating exchange. We've also received grants and won hackathons from various crypto organizations. Thank you very much. Hope you like what we're building, and if you want to be part of making peer-to-peer payments the standard, please reach out to us.
Now here's Spark with Adam McKintry from Futureverse Basecamp.
Hello, we're Spark and we're working on some of crypto's hardest payments problems. We spend a lot of time talking to top Web3 brands in this space, and they find payments very difficult. Even the top brands like Parallel in gaming, they're forcing users to cross chains and get special tokens just to mint an NFT. Bored Ape Yacht Club don't even accept crypto for their merch, which surprises a lot of people, but it's true. And it's not that these people don't care. They absolutely care a lot. User acquisition is one of their biggest problems. It's because no one's making it easy for them. Now, we've founded our own Web3 projects and Web3 gaming studios as a team. And the brands we're speaking to have exactly the same problems that we had. You go out there, you need to, when you start to look at what sort of payment provider you need, you realize you don't just need one. You might need an exchange service for currency swaps. You might need a fiat provider. You might need a crypto payment processor. You might need integrations with a whole bunch of other infrastructure like Stripe or Shopify. What a lot of people end up doing is getting frustrated that no one thing is really just doing what they need. So they end up hiring a couple of blockchain developers at $250,000 a year to spend 6 to 9 months building something custom, trying to piece together all these different parts of the ecosystem. So what we decided was needed was a custom payments framework tool where you can simply go to a single API interface and have all of crypto payments available to you. And we link all of these different parts of the ecosystem together in one easy to install tool. This means you can build a checkout experience where you can take any cryptocurrency you want. Doesn't matter to your user then what chain you're on. We can handle KYC, we can handle Stripe integration, we can install on-ramps for you like MoonPay and Transact. We can communicate with your smart contracts on whatever chain you're on. We can do digital items as well as physical items. We can do currency swaps in the background, and we're fully non-custodial. And this is just the start of the Spark MVP. We've got a big roadmap ahead. I can show you an example now of one of our clients, PortalCoin, and an activation they did with Dota 2, which is one of the biggest games, even in the Web 2 space. And they trusted us to handle their payment flow for one of their biggest moments. Here they're sending the user to their storefront. They're adding the chests to their checkout. They're presented with options here, pay with credit card or pay with crypto. In this case, they're paying with crypto, so they're going through the Spark payments flow now. In this case, they wanted them just to be able to pay with PortalCoin, so they're doing that. In this other example for a game called Mega Weapon, they're paying with USDC or a host of other currencies that they wanted. So this is a simple process for the user. In this demo, the user's already completed their transaction. So it's designed to be as simple as possible, but on the back end, there's lots of complexity going on that we're handling and hiding from everyone else. Now, we've grown very quickly. So we've only been running 6 months. In Q1 2024, in January, we only had 4 clients. We've grown to over 30 now with some big names, Portal, Vayner, Futureverse, Reebok, Somo, all of whom are finding that Spark is meeting their needs and solving their problem for in a fraction of the time, for a fraction of the cost, as versus going out and trying to self-build something. We've already processed over $33 million of payments. We want to continue starting in that Web3 native market. It's what we know, it's where the volume is, but ultimately we see those worlds merging with traditional e-commerce eventually, and we want to own that pay with crypto button on every checkout. We also want to innovate on user reward. Things like cashback and 3% annual yields are looking increasingly irrelevant in a world where people are chasing tokens and getting 10x's and 100x. So as a Web3 native crypto payment processor, why aren't we rewarding users? Instead of 3% yield, why not help them get their hands on the next big gaming token? That's something we're exploring actively. Also, we want to innovate on the traditional funding model. 1% transaction fees, we have been charging it, people are happy to pay it now, but can we do better? Can we use DeFi yields to share those yields between us and the merchant, so the merchant doesn't have to pay a transaction fee at all? We have a very experienced team in both traditional payments and Web3. 3 developers in the team. I'm the only one who isn't. My background is that I started a Web3 gaming studio, raised $5 million and handed that over to a CEO from Bungie Studios. Mark and Stefan both have a lot of experience in traditional payments for companies like Primer. Jake joined us from Tesla and has 10 years of experience as a blockchain developer as well. If you'd like to hear more, the email address is on the screen and we'd love to hear from you. Thank you.
Thanks for watching the DeFi presentations. Now meet the teams building out what interoperability looks like in Web3. First, let's hear from Robinson Burke of Wormhole Foundation, the ecosystem partner for our Wormhole Basecamp program.
Hey everyone, Robinson here, co-founder of the Wormhole Foundation, one of the core contributors to Wormhole, for those who don't know me. Really excited about today. I know this has been months in the making for a lot of teams. There's been a lot of hard work. So thank you everyone for the hard work, and excited to see kind of the next chapter for a lot of you guys. I wanted to take a step back and kind of go over Wormhole quickly for a second. I know all of us are familiar, but more importantly, interoperability and kind of why it's important and how we see things progressing. It's funny. I remember, Wormhole's been around for 3 years now, but I remember having conversations with teams that were, I don't know, maybe it was like a year and a half ago. You had this like repeatable pattern. It was, building typically on Ethereum, but building an application. And then once they're live, looking around and being like, all right, what's our multi-chain strategy, right? It was this afterthought. And it ended up making sense for a lot of these teams because, they don't have to deploy entirely new set of smart contracts or essentially their application on another chain, have to get audits again, et cetera. It takes a lot of time away from building new products and features, right? Like, it's almost like do you choose multi-chain expansion and dedicating resources there? Resources aren't fungible. So you have to there's a push and pull there. So I saw teams going through this, and the pattern was launch, gain traction, then figure out how to go multi-chain. And I think what we're really excited about is, well, number one, we can all agree on that not only is the industry multi-chain, we're seeing so much traction with these other chains, right? It used to be like, industry's multi-chain, a lot of it's happening on mainnet. Now it's like industry's multi-chain, a lot of it's happening on L2s, a lot of it's happening on Cosmos, these other, alt VMs, alt EVMs. And so there's almost this necessity to be able to have an application that functions in a native way across all of these chains. So, for us at Wormhole, we're excited about this opportunity, and that teams like everyone in Wormhole Basecamp has an opportunity to kind of get ahead of this curve and build these multi-chain native applications. For those who aren't familiar with Wormhole, and I know most of us are, but we've been around for 3 years. We connect over 30 blockchains across 5 different virtual machines, which is extremely difficult, and there's not a lot of other teams, if any, that do this in the industry. We've processed over 1 billion messages, over 41 billion in asset volume. And for us now, this next iteration is we want to continue to lay this infrastructure and make it secure, but we want to focus on builders. If we're doing a good job at the end of the day, Wormhole falls to the background. People only realize that they're using the applications, and they don't realize Wormhole's in the background. So we want to empower teams like you all. And so that's why we're really excited about this Wormhole Basecamp. And this is just the beginning, as they say in this industry, right? We've got a lot of cliche statements, we got a lot of buzzwords, but this is just the beginning for a lot of you all. And I consider it still just the beginning for Wormhole as well. So excited about 2024, building with you all and beyond. So thank you again, and see you around.
Thanks, Robinson. Now hear from Alpin Sheth of Borderless Capital, the venture partner for our Wormhole Basecamp.
Everyone, I'm Alpin Sheth. I'm a partner at Borderless Capital. We're a Web3 fund with over 200 investments with founders all over the world. We invest at the earliest stages and honestly have learned a lot since we first launched in 2018. As one thing, it's very clear to us that fragmentation is a major risk to the growth of Web3. And that's why we believe cross-chain interoperability is necessary for the growth of crypto assets and platforms longer term. With new L1s, L2s, roll-ups, and other novel typologies, there has to be a robust, secure aggregation layer that connects all these systems and networks. And that's the thesis of our cross-chain ecosystem fund, which we launched alongside Wormhole and all the leading layer ones, foundations, and leading crypto institutions in the space. We've made over 25 investments from the fund, and Wormhole has been a great partner along the way. We believe that this team is committed to setting the highest standard of interoperability. We both spoke about it for some time, and we both agreed that we wanted to partner with Outlier to launch the first cross-chain Basecamp. It's been great to learn how teams across the world, across different ecosystems, are innovating in the cross-chain space. And we've gotten to know the founders here in this cohort really well, including Zoth, Scholes, Temporal, Sershat, Intentify, and Lucidity. They've made a lot of progress coming into today's demo day, and we're excited to see them continue to grow. Thanks.
Introducing the teams building interoperability across Web3, Scholes, Temporal, Lucidity, Intentify, and Zoth. First up, let's hear from Scholes with Gamma from Wormhole Basecamp.
Hi, I'm Gamma. Today I'm going to be running you through Scholes, where we're reimagining options from the ground up. A bit of background about us. We've been building together since the dawn of DeFi. We began working on Scholes in June of 2023. At Scholes, we are aiming to be the first optimally collateralized multi-chain options liquidity hub. Our primary value proposition is to make underwriting 2 times more capital efficient than anything in the space right now. As a team, as I mentioned, we've been building together since the dawn of DeFi. Almost everyone on our team has been in the crypto space for at least 5 years, some of us 8+ years. And we've been building successfully in the crypto space for the majority of that time. So a bit of background on the crypto options market right now. You have about 75 billion in options volumes taking place per month on Deribit and Bybit, whereas you only have about 1 billion taking place on chain, and that's on a good month. We expect this to change. We do think that about 10 to 15% of off-chain volumes will move on-chain, similar to the way that perp and spot markets have been trending. And we aim to be the venue that captures that volume. So the reason we think that crypto options volumes haven't come on-chain just yet is primarily due to the capital inefficiency of existing protocols, the limited flexibility on these protocols, and the terrible UX on them as well. So we're looking to fix all of those things. Our primary focus is on collateralization. We are optimally collateralized, allowing underwriters to really maximize the number of contracts they can underwrite per dollar deployed. We will have multi-collateral underwriting. This will allow you to bring any basket of collateral supported on Scholes and underwrite options against them. So you could underwrite cross-asset as well as with a basket of stables and underlying. We'll also be adding LP tokens as collateral as well. We also will have permissionless markets, where users can generate an options market for any token. All we need is a price oracle for that token, and you'll be able to spin up an order book and begin trading options on it. Our approach for collateralization, we are taking an option value approach. So rather than collateralizing based on the notional value of the option, we collateralize on the option value instead. This allows us to be significantly more capital efficient than any of your notional collateralization protocols. And you can see here on the chart kind of how we compare to Deribit and Avo on the collateralization curves. Our approach to UX, we've introduced the Scholes terminal. The Scholes terminal is a Uniswap type interface. When you land on the page, this is your default landing page. We have abstracted away a lot of the complexities of options just to really provide a seamless experience for new traders as well as veteran traders. So we think one of the big issues with converting perps traders into options traders is the overwhelming UX you get on most crypto protocols. When you land on these options protocols, you have a full options chain, you have the Greeks, implied volatility numbers, all the things you as a veteran options trader want to see, but as a retail trader, it kind of scares you and you're less likely to trade on them. So we've abstracted those things away and created modules that you can add here for the order books, for the Greeks, price charts, your orders, collateral, P&L, anything you want to track, you can add it. We'll also be adding a perps module that it calculates the leverage of an options position that you're looking at and gives you a mirror of what that would be as a perp position. This again just helps us reframing options into the mind of perp traders so that we can begin to cannibalize some of those volumes as well. So our liquidity aggregator, we will also be aggregating liquidity cross-chain and cross-protocol to help provide the deepest books in the space and give the best execution possible to traders. Our platform fee structure, we have a maker fee at 0%, taker fees 0.3, settlement fee 1.5, and liquidation at 20. Maker fees, we did decide to go with 0 for go-to-market to just really help incentivize market making on the protocol. Our roadmap, we're currently on private testnet on Base. We are looking to roll out public testnet at the end of this month and then public testnet phase 2 in June, with targeting protocol launch and LBP in July. Our token economics, we will have a governance token. It'll be used to vote on various parameters in the protocol. We'll also have a protocol-owned liquidity pool. This will be a 1% fee pool on Uniswap. That 1% fee will be routed back into the Scholes protocol and used as trading incentives. This creates a very nice flywheel effect where the more speculation and trading there is on the token, the more incentive there is to trade on Scholes. The more trading there is on Scholes, the more revenue is generated for token stakers, the more incentive there is to buy tokens and stake them. So stake tokens will act as a backstop in the protocol, and revenue will be shared with token stakers. Go to market, we're currently working on our marketing and outreach on Twitter and Farcaster. We're working on ecosystem partnerships with various chains in the space, and we are working on running community contests over the next couple months as well.
Introducing Temporal with Varun Verma from Wormhole Basecamp.
Introducing Temporal, defragmenting liquidity, defragmenting markets. The market structure of yield and derivative contracts across both TradFi and DeFi is broken. Every maturity is siloed into their own separate markets. For instance, 30, 60, and 90-day futures contracts of the same asset trade on separate order books. This thins our liquidity and limits maturity choices available for traders. In TradFi, OTC dealers of Disney bonds, for example, are required to actively maintain separate markets for each maturity that is issued by Disney. In DeFi, this is even worse. Pendle and Notional have their liquidity spread across 2 to 3 pools of the same asset, resulting in concentration of activity in one pool over the remaining. Such fragmentation in a market worth trillions calls for a new design. Temporal solves the problems through our novel VAMM that introduces time unified pools. It weaves together the different maturities into a unified pool for the asset, generating a continuous forward curve for it, serving any maturity up to a preset bound and defragmenting liquidity across the time space. The liquidity for the asset is also networked with its pools on other chains connected with Temporal, and thus defragmenting liquidity across the asset space as well. Our plug-and-play market infrastructure powers a range of native DeFi and institutional applications, enabling the ecosystems to operate their markets to the limit of efficiency. The architecture you see in front of you creates distinct advantages for all stakeholders of the ecosystem. Native settlement that adds more transactions to respective chains, modularity for easy integrations, so dApps can have enhanced functionalities with minimal implementation time, and added revenue sources. The fee structure is created to incentivize adoption, wherein all fees earned is shared between Temporal and the applications on the network. Our network enables diverse yield curve products, serving both TradFi and DeFi. For example, in DeFi, Temporal brings yield trading, the simplest way to hedge, speculate, or amplify rates of staked assets, points, or LP yields. Credit markets for ecosystems to have deeper lending markets that operate at minimal deadweight loss compared to existing models. And vesting token markets that bring liquidity and yield to locked tokens. In TradFi, Temporal brings efficiencies to the single largest financial market, that is interest rate swaps. Unified bond markets for dealers to trade all maturities of the same issuer. And finally, flexible forex futures that allow precise hedging and cheaper OTC contracts. So how do we approach all this? Temporal's first application is yield trading. Liquid staking TVL has quadrupled in the past year as the number of proof-of-stake chains and yield-bearing assets grow. Yield trading is emerging as the preferred way for users to do more with their LSTs, evident from the substantial growth over this year. Yet, there is only one major player serving these needs. This is the right time to be launching an efficient yield trading solution, especially in a significant ecosystem like Cosmos, where liquid staking TVL has begun exploding. The result of ecosystems like Celestia, BetaChain, and Injective emerging, where we'll be launching first. Going forward, we will be serving multiple ecosystems and facilitating cross-chain volume growth through Temporal's omni-chain vision. Yes, yield trading opens a lot of opportunities for traders and LPs. But as the finance world has repeatedly seen, increased flexibility also brings more complexity for its users. But we have something for this too. Let's walk through a sample transaction. Let's say you have a liquid stake token and want to amplify its returns. Simply select the asset you want to sell, choose YT of the asset, and drag the pointer to your desired duration. And there you have it, yield trading with unprecedented flexibility and unprecedented simplicity. As Temporal spreads yield trading through the Cosmos ecosystems, we'll be expanding coverage to other ecosystems like the Bitcoin L2s and Solana, concurrently introducing the network's other products beyond permissionless chains and to the TradFi chains as well, such as JP Morgan's Onyx and Laser Digital. The team bringing you Temporal has a deep background in risk, from diverse fields like corporate credit, portfolio management, and clinical trials, coming from prestigious institutions like Guggenheim and McGill. And finally, if you'd like to enable yield trading for your ecosystem, reach out. We'd love to talk to you.
Introducing Lucidity with Rudraj Mehta from Wormhole Basecamp.
Hey guys, this is Rudraj, the founder of Lucidity, recording this video as a part of the currently ongoing Wormhole Basecamp program run by Outlier Ventures, taking this opportunity to share what we've been building. Starting with a quick bit about myself, I have a background in traditional tech. I've been building in DeFi, specifically focused on mechanism design and go-to-market for over 3 years now. And we've been building Lucidity for almost a year. And Lucidity fundamentally is an AI-powered leveraged liquidity layer of the DeFi stack. Coming to the problem statement, there are multiple stakeholders that operate right now within the leverage landscape. It's not just lending, borrowing, and CDP protocols and users on top, but there are liquidators, vault protocols, yield aggregators, credit scoring protocols, risk curators, etc. And all of these stakeholders operate in a very one-on-one fashion and engage with each other in a very siloed way. So this leads to not just a lot of liquidity fragmentation and capital inefficiency, but just a lot of redundant development and integration effort across the board. Talking a little bit more about the ecosystem itself, the leverage markets have always been the biggest sector in DeFi, with over 450 protocols holding more than 50% of the DeFi TVL. And these numbers are only going to go up with the ongoing narratives around rollups, RWAs, private credit, etc. And what does the solution look like? 3 fundamental focus areas. First is efficient discovery through an AI algorithm that helps all these stakeholders assess risk parameters, backtest their strategies, run simulations, etc. Second is optimal management of positions across chains through a series of integrations in the background, smart accounts on top, automation strategies, etc. For smart accounts, we're an ecosystem partner of Safe, and for cross-chain UX, we're going to be leveraging Wormhole. And finally, wrapping all of this up into a very simple plug-and-play SDK that other teams can leverage and build on top of as they build within the leverage landscape. And this is where we want to get to. Fundamentally, an infrastructure layer on top of various sources of leverage and underneath all other stakeholders that consume this leverage, and hence building the leverage liquidity layer for the DeFi stack. And to be able to stress test our infrastructure, the first step is we've created an end user facing product on top of Lucidity's infrastructure in-house. Here, users can create dedicated smart accounts, import external positions into Lucidity, discover new markets through the discovery engine. They can optimize for multiple parameters based on their own risk appetite. They can discover new markets. They can manage positions across these protocols through a single click and all through a single interface. The product is already live on Ethereum mainnet together with the simulation mode. And we've already seen over 500 unique users with over 5,000 unique transactions within the first 10 days of launch. And this is our go-to-market strategy. So we're going to be running the product that you just saw only for waitlisted users for about a month from now. And we're parallelly expanding across different L2s. The first ecosystem we're launching on is Base. We'll be launching on Base in a couple of weeks from now. And we'll continue expansion across L2s over the next 3 to 6 months. Parallelly, we've ramped up a lot of efforts on the discovery engine research, and we have some interesting announcements coming up for PyCon happening this month. We've been building for about 10 months, as I said. We have all the foundational pieces in place to really scale Lucidity's infrastructure from here. And coming to protocol revenue, the end user facing product, which happens to be the first use case of our infrastructure, earns through certain fees that we charge based on some complex actions and automation strategies that users conduct on the protocol. Over time, we'll be monetizing the discovery engine and the entire SDK, all associated toolings, open source libraries, and everything. So people and other teams can build on top of our infrastructure. Again, talking about the end user facing product, immediate competition comes from portfolio management tools like InstantApp, DeFi Saver, SummerFi, etc. Although we're still operating a layer below them because they have no focus on discovery. Their main focus is management. And from a long term, and I mean 3 to 6 months perspective, they're potential collaborators or even subscribers of our SDK. And this is the team that is building the entire infrastructure behind the scenes. We have extensive experience across DeFi and machine learning and have some solid advisors on board from both machine learning and the core DeFi ecosystems. And we're confident that we're the best team to bring Lucidity to market. With that, thank you for listening. We're open to feedback. Thank you.
Introducing Intentify with Daniel Voronov from Wormhole Basecamp.
Hi, I'm Daniel, and happy to present you Intentify, the intent-based interoperability protocol. A big pain point that prevents crypto from mass adoption is the current cross-chain fragmentation. If I, as a user, don't have funds on a certain chain where I want to use an application, I have to go through a complex, multi-step process to bring my assets to the target chain. And if I, as a developer, want to improve this user experience, I currently have to deploy my application on multiple chains to onboard all potential users, leading to enormous costs. So in most cases, the cross-chain fragmentation leads to a bad developer and user experience. As a developer, I'm forced to deploy my application where I think my users are and not on a chain best suited for my dApp, often driven by narratives and before even finding product market fit. This is because the increasing number of chains and rollups fragments the assets and user accounts across multiple chains which behave like silos. And as a user, I have to manually perform a series of complex transactions just to use an application on a new chain. So I need to have an understanding of the underlying network, what cannot be expected from the mainstream user. This cross-chain fragmentation problem can be solved with Intentify. For the developer, it means he can deploy only once on a chain best suited for his application, and onboard user from any chain by aggregating all user assets in a single cross-chain account. And as a user, I can interact with the application on any chain without worrying about underlying network and bridging assets. Our protocol is enabled by two main components. First, our intuitive intent language with a seamless integration into the front end. And second, our powerful cross-chain accounts, which are usable from any wallet. You can think of it as a chain abstraction layer between protocols and users. Everything is abstracted from the users, and they simply interact with the application without to care which networks are used. The same way as no one cares which cloud provider is used by your favorite food delivery app. But under the hood, there are Turing-complete accounts which are deployed and synchronized through cross-chain messaging, and all state changes are outsourced to external solvers and executed in a verifiable and self-custodial way. Here's an example how the integration and user experience look like. I'm a user who wants to use an application on Base but has no funds there and only on Arbitrum. Currently, I can't do it. I have to switch networks, swap, and bridge assets first. This can now be enabled with Intentify. The developer just has to define the intent logic in our simple intent language, compile the intent, and integrate it into his front-end code by passing the user input parameters. That's it. Now I can perform the intent-based cross-chain swap seamlessly, just with a single signature and without leaving the application. Due to the increasing number of chains and rollups, the fragmentation and complexity increases and causes high demand for chain abstraction. Account abstraction already lays the foundation for an improving UX, and with our internal VM technology, we bring accounts to a new level with programmable intents, targeting any dev willing to expand their user base and implement intent-based features. To lower the barrier to entry for devs, we're offering them our solution with zero fees. The protocol fees for intent settlement are paid by solvers as a share from their arbitrage profits. And we plan to distribute the protocol revenues to our token stakers. We're initially targeting developers on EVM-based L2s, struggling to onboard more users to their dApps and ecosystems. After solving this concrete pain point for them, we're planning to scale with a broader range of intent-based features, such as intent-based automation. Here, programmable intents remove the need to deploy smart contracts and enable a flexibly adjustable automation logic, saving costs and time. We can distinguish ourselves from our competitors on the one side through a fully expressive intent language and the ability to support any use case, but on the other side through a lean abstraction layer with seamless integration to existing protocols and dApps. We are a team of crypto natives building on-chain products together for many years and have experience in building secure smart contract architectures, virtual machines, and compilers. We have already developed the proof of concept for our protocol featuring our Turing-complete account, intent language with compiler, and our internal solver. Our goal for next month is to finish the core protocol implementation with an improved developer experience to kick off the alpha testing phase with pre-selected customers, and to close key partnerships with ecosystem multipliers, creating a scalable developer onboarding process.
Finally, Zoth with Pritam Dutta from Wormhole Basecamp.
Hello, everyone. Thanks for the opportunity to present Zoth to you. So Zoth started in Jan 2023. Our vision at Zoth is to bring both on-chain and traditional finance together. It stems from our personal feedback of building fintech businesses across LATAM and Africa, where we saw for the real time how businesses face challenges in terms of accessing capital for liquidity for any of their cross-border trade. At Zoth, we are bringing traditional financial products on chain, starting with working capital finance for trade finance and other fixed income products like AAA money market funds, and finally permissionless DeFi. Imagine you are a treasury manager at an L1 and L2 chain. You have a large part of your treasury in native crypto, as well as other crypto coins and stable coins. You are looking for fixed yield on your assets with zero risk to your capital. And that's your primary allocation. But in crypto, there are very few options as of now. Most of your capital is currently going to treasury bills, which offer low yield. The other options are DeFi native staking platforms, but we know what happened with products like Terra. At the other end, businesses from emerging market, especially mid to large slice players, are looking for access to capital. If you take the example of countries like UAE, entrepreneurs there don't have easy access to capital, and credit is always crunched in these markets. In parallel, stable coins have become the preferred route for global finance. They are increasing rapidly, and Y Combinator have highlighted them one of the top opportunities of innovation in this space. Introducing Zoth. Zoth is a DeFi infrastructure that brings various fixed income products on chain which originate from emerging markets. We have started with trade finance pools and bringing other fixed income product on chain, bringing transparent and real world yields to our investors and providing new age liquidity and capital to our assets. We have been around for only a year, and it's only been 7 months in our product has been live. We had over 50 million in assets that have been originated. We have contracted over 7 million and have a $140 million pipeline. Our customers include suppliers to companies like Budweiser, entities associated with Ministry of Education in Singapore, as well as Costa Coffee. We have a 3-tier structure and multi-country structure around UAE, Singapore, and Luxembourg, where we operate. And we have partnerships with Coinbase Asset Management. We are actually one of the first dApps to be listed on the platform, MasterCard Token Network, and Standard Chartered for distribution. In this short span, we have built a global infrastructure, which includes OTC players, distribution, as well as L1 and 2 chains and cross-chain bridges to give us access to global capital. RWA is a hot narrative, and we have recently seen companies like Ondo and Maple, who are more US focused and operating in the similar sector, seeing a huge spike in their FDV. At Zoth, we are not listed yet, but we are planning for our TGE in August, and we intend and we believe we will see the strong similar public demand as we launch. Our go-to market is primarily structured with a combination of L1, L2 chains. Our current customers include hedge funds, family offices, like Funfair Ventures and Asymmetric Capital, and L1 and 2 chains like XDC and Cello. Our business model has 4 sources of revenue. Primary sources include interest rate arbitrage, and secondary include like trading and OTC partnerships where we onboard new customers who are new to crypto. ZAT token is at the heart of everything that we do at Zoth. Every investment in Zoth comes with a proof of investment, which is an NFT, and which we are building an ecosystem on top of it, which includes real crypto collateral on top of our Zoth asset token, fixed yield on our Zoth collateral, as well as secondary trading across exchanges. Our team includes a combination of fintech experts, ex-entrepreneurs, private bankers from companies like Nomura, HSBC, and Jefferies, as well as lawyers and chartered accountants, building a 360-degree team. Looking forward to happy part of the journey. We have been rated one of the top 20 hottest startups by Singapore Business Review recently, and looking forward to have more partners as we scale our journey. Thank you.
Thanks to all the teams that presented today. Some really, really brilliant presentations. So I think really highlight the level of excitement and innovation happening both in Web3 generally and, of course, within the Bitcoin network and cross-chain DeFi. Of course, again, thank you to not just the founders, but our accelerator leads, subject matter experts, external mentors, and pretty much everybody else in the ecosystem that really helped make this cohort a success. It takes many, many people, both within Outlier and across our wider ecosystem. Another quick reminder about the platform today. It contains embedded links. These allow you to get in touch with teams directly if you've got any outstanding questions or you missed contact information in the slide decks, etc. You can also email us at fundraising@outlierventures.io. Somebody probably called Pietro will reply to you there to make sure you get all the information that you need and any contact information. I hope you kind of leave this day really as excited as I am to see the teams that are graduating over the course of 2024. And of course, we're all looking forward to what we hope to be much better market conditions and an environment to be launching these token economies. Many of you hopefully will be joining us also tomorrow, day 2, where we'll be showcasing the best teams from across our infrastructure category and as well as open metaverse. If you haven't yet registered, go to the bottom of the softer page here and register. Equally, you can do it on Luma. Thanks for joining today, and I look forward to seeing you for the next Q2 demo week, showcasing our exciting AI, real-world asset, and DePIN programs. Until then, look after yourselves.